Hello, I'm David Frazier, mortgage note investor. Welcome to my channel at Note Wealth Wisdom, where we answer some of the most frequently asked questions in mortgage note investing, and we try to provide some education on one of the best kept secrets in real estate investing. Question: how does foreclosure work if the borrower defaults on the mortgage? From a legal standpoint, you would need an attorney to file foreclosure action against the borrower. A loan usually has to be in default 90 days before they can do that, and that's pretty standard across the U.S. You would first have your servicer reach out, try to contact the borrower to see what's going on. You hopefully be able to work out a solution before the foreclosure has been filed. A foreclosure would affect the borrower's credit for up to 10 years and may prevent them from getting another home with traditional financing for a long time. Workout's a way better option. Options for workout arrangement could be a restructuring of the loan to fit the borrower's needs for whatever they're going through, whether it's loss of a job or divorce or sickness. You need a financial packet from the borrower to determine what they could afford as a new payment. Since you're holding the loan, you can work out a restructured mortgage with them. Hopefully prevent foreclosure from happening in the first place. This is always preferable to the foreclosure. It's way less expensive, but helping the homeowner and creating a win-win situation for everyone involved is the most desirable outcome. If a foreclosure is not preventable, then a deed in lieu of foreclosure, where the homeowner deeds the property back to you, with possibly an offer of cash for keys to help them move. You give them a little bit of money to help them and their family move with dignity, with the stipulation that they're only paid upon cleaning the house and taking all their belongings with them. If the property goes through the foreclosure process and an auction is held, you need to bid on the property to cover the mortgage balance. But someone could outbid you. You would be paid the balance of the mortgage, and the homeowner will get the excess over and above what you received for the mortgage payoff. This is just a brief description of the foreclosure process. There are timelines that need to be met, and careful documentation to keep track of. Cannot deal with the borrower directly due to the Fair Debt Collection Practices Act. You also need to direct your servicer accordingly, and you need a competent attorney to carry through the foreclosure through. Keep in mind that foreclosure can easily cost $5,000 or more and can take up to a year to go through the foreclosure. And it depends on what state the property is in, whether it's a judicial or non-judicial state. It will also affect the timeline process from start to finish. It's always a good idea to keep enough cash and reserves built up for just such a scenario. You also have to keep in mind that you are responsible for the payments to your financial partners or investors that may have partnered with you, and having a cash reserve and being able to keep payments while going through this process is paramount to keeping you in good graces with your business associates. It's just good business practice in general. Hope you found some value in this video. If you did, please hit the like, share, subscribe button. And I'll leave you with this parting thought. Life is 10% what happens to us and 90% of how we react to it. That's Charles Swindoll. God bless, and I'll see you in the next video.